All right, enough of that music. Welcome guys, welcome. Thank you so much for waiting. But let's begin our Tuesday live stream. Hey, 7 likes. That's what's up, that's what's up. And we are also halfway to 500 subs. Isn't that amazing, guys? We're halfway to 500 subs. Let's get some reactions to that in the chat. Like I said before, we're really growing exponentially here, and it's been a journey here, and I've been loving every second of it. So again, thank you guys so much for all the support, the likes, the comments. Everything really helps. It really pushes out my content, my live streams, my videos to everyone who needs to see it, right? People who need to see the information that I'm giving out. So again, thank you guys so much from the bottom of my heart for just simply supporting me by clicking the like button, clicking the subscribe button, clicking the notification bell. Whatever it is that you guys do, it will always help. All right, so as stated in the title and in the description box down below, let me give you guys a little bit more of a specific reason why I believe the stock markets are going to surge into the end of this year. So let's first of all begin with IWM, right? The Russell 2000, right? So small caps are absolutely surging overnight on elections, right? On election type, and it actually made a new higher high and officially a new 52-week high as well at the same time. And for me, this is good because personally, as a disclaimer, I do have a core position, a very large position in IWM in my long-term account. And you know, it seems to me that as small caps continue to move up higher into the end of this year, we'll continue to see the overall market breadth continuously expanding. Now, something that you guys should always remember, whenever we're in a strong bull market, the bullish sentiment literally touches every single sector in the overall market and every single asset class and every single market cap, like the Russell 2000 or the small caps. Well, and obviously the mid caps as well, as an honorary mention there. So that is what we've been seeing for this entire year. And so far, it seems like small caps have a lot to catch up on compared to the S&P 500 and even NASDAQ. And earlier, I believe, well, not even earlier, but I believe like a couple months ago, we're seeing the Russell 2000 having better market internals, better relative strength compared to NASDAQ. And that was pretty surprising, but unsurprising to see happening from a technical perspective, as we knew that we were in a very, very strong bull market where the bullish sentiment and just the overall bullish bids will continue to visit every single sector and every single asset class and every single market cap. And so for me, again, IWM, this will be a huge win for me tomorrow if this overnight move holds on the overnight futures here. But obviously, we all know that the futures market reaction during election night is always an overreaction, right? So that we need to be prepared for. I wouldn't be surprised if I start unloading some small cap positions here, since again, we have made a higher high compared to the previous high that we made back in, well, the very last day of July. And if you guys forgot, us, the readers of the CFO Swing Watch report and the private CFO Discord members, we made a killing in July with IWM. I personally got, I think, like a 410% swing return in a couple of trading days here. And I believe I got that position somewhere around here. It was either at the turn of into July or right before July. I think maybe like June 27th or something like that, or 28th. Regardless of when it entered, right, we got the bulk of this move, right? So I wouldn't be surprised again if tomorrow I decide to sell some of my core positions in IWM. Again, I have multiple positions, layer positions that I've been holding. So you know, for IWM here, it looks like if this overnight move holds, you know, we can at least maybe potentially gap up to around 228, 229, ideally, right? But maybe max if we do see a further surge in the overall overnight markets, futures markets, we might see even an open at 230, this whole number level that I've been watching out for, so that we'll be able to get back to 233 and eventually hit that 240 target in IWM, which I've been touting for most of this year, right? So I even have a tweet on my Twitter page where I mentioned to Tom Lee, the founder and of Fundstrat, right? And you know, I was trying to ask him, you know, bring that target down, because I believe he had a target for IWM at like $300, and I was like, oof, that's a little too much. All right, that's extending a bit too far. I don't know if he did that on purpose to try to have more of the retail traders to come back into IWM, since they're destroyed in 2022 and 2021 as well. Well, not 2021, 2022, excuse me, and 2023, with all this volatile moves up and down. But now that we're making higher highs and higher lows here with the textbook uptrend, you know, hopefully we can get to that 240 target, and maybe Tom Lee can also finally have his adjusted target of IWM at 240, just like us. All right. So now, with that in mind, with small caps and mid caps showing really great relative strength so far overnight, and obviously today, after, you know, a monumental move day of nearly 2% on the day here, let's take a look at the S&P 500. So, SPY. Now, here is a little sneak peek at the official CFO Stringer Watch report. Okay, now I want to give you guys a little sneak peek here on the actual market summary of this week's report, because, okay, this is what I said here, right? So, okay, so right here, all right, so I said this bottoming out trade usually leads into a larger run up into the end of the year and right into that Santa Claus rally. I want you guys to remember that statement right there. And now this is something that we want to focus on this week, because SPY happens to be hitting oversold levels on the intraday, and that's on the RSI itself, especially if you see a lower low occurring early this week. Not only is it hitting oversold levels, but it's at a pivotal spot for a bounce. And I explain all of this in my TA video that I also attach to the actual report every single week. And you guys can now see the then private but now public CFO Stringer Watch reports technical analysis video linked down below in the description box. Okay, again, it's right down below, the very first link. It's available for you guys to watch now publicly. All right, and so based on that video, I specifically stated that I wouldn't mind, or I wouldn't really mind if we see lower lows and lower highs, as long as this week we're able to hold this daily 50 SMA, which has been rising up higher and higher, trying to catch up to their price after we briefly broke below it back in the August lows and September's lows as well. And so that's exactly what we did today. We had a nice gap up after yesterday's brief peak below the daily 50 SMA, and currently we're literally seeing my technical analysis that I've analyzed and I've planned for through my private CFO Stringer Watch technical analysis video. Again, that's now public, and it's good to see that everything is working out so far. Now, today, I continue to tell my members and readers that we're looking for that official retest of the daily 10 SMA, right? And that's exactly what we got. And in fact, we got even a better close here, way better close here, because we're able to close, I believe, almost 20 cents higher compared to where the daily 10 SMA closed, right? So I believe, let's see here. I don't know why it's not showing up. Oh, there it is. Okay, I was looking at the wrong one. So the closing price for today was 576.70. Okay, and the actual closing price for the daily 10 SMA, my red line here, was at 576.51. That's only 19 cents off. All right, so we closed slightly above the daily 10 SMA. Now, obviously, there is a large gap up that could potentially occur tomorrow morning as futures markets are upholding this massive move up higher. And to me, it seems like we're getting that V-shaped recovery that I also mentioned in the private but now public CFO Spring of Watch Report technical analysis video. So again, don't miss out on watching this video, guys. It's essential that you guys watch this, right? Especially for all the non-members who are now watching it, or who possibly will be watching it tonight. All right, let me also share it in the actual chat room as well. Make sure you guys watch it. All right, and again, if you guys want to be able to watch this video and also read the entire report on Sunday night, make sure you guys DM me, because I have a 50% off discount code for your first 30 days waiting for you. All right, all you have to do is DM me on Instagram at ChartsFocus1. So with this huge surge overnight, okay, I expect SPY to at least be around the range of, obviously the markets will fluctuate overnight, at least 584 to around 580. It's a big spread, 4.4 point spread there, but with the fluctuations that will happen, okay, that's a guarantee. I expect the prices to at least be around 480 to around 484 by market open tomorrow if we hold these overnight gains. And so for SPY here, it seems like we're just beginning the November seasonal pattern here. The average seasonal pattern usually tells us that November is one of the best performing months in Q4 of any fiscal year, right? So I've also put this in my report as well. This is from Equity Clock. A lot of people use the Equity Clock's seasonality specifically for the S&P 500 index, or ticker symbol SPX. And you can clearly see here that we do see a very good bottoming action here in October, and November is where we had that very, very nice lift off into highs, and we continue to trudge up higher into December as that bullishness trickles to the last month of this fiscal year, or any fiscal year. And so combined with this, right, I have my own chart here where I'm looking at every single major asset class, right? And if you take a look at November, we have literally all the asset classes performing really well except for commodities. But again, that's still a very, very small move down, negative 0.07% on average, right? And then that obviously this strength, this overall performance and overall relative strength trickles down to December, and it continues that amazing run up higher. And if you guys see here, look at how small cap stocks do from November to December, right? So we begin that bullish fervor, that bullish crazy sentiment in November, and that transfers over to December. All right, so again, amazing start to November so far for both small caps and mid caps and the overall markets. Okay, so again, this is the CFO Spring of Watch report for this week, November 4th through 8th, right? We have a very, very good report this week. And, everything is literally killing it. All the names that were mentioned, okay, in this report. And again, if you guys want to read this, make sure you guys DM me on Instagram at ChartsFocus1, right? And you guys will receive that 50% off discount code for your first 30 days. You guys do not want to miss out on this opportunity. All right, again, just DM me on Instagram at ChartsFocus1. That is my handle for every single major social media platform that I am on, okay? Right, so now, based on all of that, okay, the markets will continue to surge based on seasonality and just overall seasonal patterns. And obviously, the fact that we're seeing really good bullish option flows, right? Ever since the August dip, I've been seeing some amazing, very, very large put sales and huge call buys for major ETFs and major indices, excuse me. And it seems like ever since that August bottom, we're just making consistent higher highs and higher lows. Now, yes, on the S&P 500 itself, okay, ticker symbol SPY, excuse me, guys. I'm gonna have to drink some water here. Or actually, I do have some good limeade here. Ooh, that's sour. My God. Sour but good. Woo. So, what was I saying here? So based on the technical analysis on SPY, there is a little bit of a concern here of the fact that the price is below this rising wedge that I've mentioned a couple of times in the past 2 weeks, right? So as long as we're able to come back into the parameter set up by this wedge or by these two ascending trend lines, this resistance trend line and the support trend line, and again, if we're able to range between 580 to 584 overnight and maybe ideally open up at 584, there is a slight chance that we can reject at this ascending support trend line, but hold above the previous all-time high level of 578.50. Again, I don't know how many times I've stated this already, but just to repeat myself for significance, right? 578.50 and 563.50 are going to be very, very important levels into the end of this year. Okay, so 563.50 will be the line in the sand if we decide to move back lower as we head into December, maybe. And 578.50 is going to be very important to hold if we are to continue to move at a rapid pace back to the upside and possibly to that outrageous target that I set for SPY a couple months ago to 600. All right, so again, for SPY, I have a target to 600, and for SPX, I have a target to 6,000. Okay, if you guys forgot, make sure you guys take a look at the video that I specifically made on those outrageous but very viable targets for SPY and SPX in my channel, right? Just take a look at my channel and you guys will see that there's a video on that specific topic. Okay, so again, based on seasonality, based on the overall bullish bull market, literally bullish bull market, we should be seeing that overall surge into the end of this year. Now, there's one single sector that I have been talking about and touting ever since we saw a large breakout in this specific sector, and that is the tech software sector, or IGV. Okay, this is the tech software sector ETF. So software has been leading for, at least half of this decade, right? And we've obviously seen the importance of semiconductors for the past 2 years now with this AI play coming in hand. But software itself will also benefit largely from this AI revolution. We've been seeing it across every single industry, every single sector, and just overall, globally. And IGV is something that you guys do not want to miss out on because, as I've stated, from a technical standpoint, okay, I wrote this back in August, okay, back in maybe early September, or maybe back in mid-August or late August. But again, doesn't really matter when I wrote this, but just letting you guys know when I did. I specifically said, is a major breakout about to occur over $89. And that is important because when I wrote this, I also stated that if we do see a breakout in IGV, is that considered a bear market? Are we about to see a correction in the markets? Absolutely not, right? The tech sector or the overall software sector or group is a major leader, right? They have been leading the markets for years, right? For, I would say now, much of this decade actually, not just half of this decade, but much of this decade. And specifically on a very, very specific group, cybersecurity stocks, which are also considered tech software stocks, have been doing extremely well, and they will continue to be of great importance as we go into the next decade as well. And so IGV, I am, again, disclaimer, I am in this one. I also have a very large core position on this. I'm glad that's reacting very, very well. I actually entered into this position, I think like 2 days ago. I think 2 trading days ago, I think it was on Friday. It was either Friday. I think it was Friday or Thursday of last week. Okay. And so, I am up nicely. I think I'm up 40% by the end of this trading day today, I believe. But anyways, that's gonna change tomorrow if you hold this gap up. So what I'm trying to tell you guys is that a major leading group like the tech software sector is showing higher highs and constantly hitting all-time highs after pretty much lagging behind from NASDAQ and even the S&P 500 for most of this year, right? So this is IGV back in January, right? Late January. And for most of this year, we didn't do anything until in September, we made that official all-time high price print, and we continued to surge up higher, right? So IGV, I wouldn't be surprised if IGV is around $98 or even $100 by the end of this year, right? Okay, so IGV again, I do have a personal bias because I do have a core position in this ticker, but yet again, just from a technical perspective and overall, the importance of the entire tech software sector and just this individual group alone, this leading group alone, I don't know why in the hell you would be bearish on IGV, right? Massive cup, massive handle that formed between 76 and 89 this entire year, and we officially broke out of it. All right, so basically consolidation for nearly 3 years, all right, since this cup began in 2021. Okay, so this is an amazing breakout from this massive cup and handle that we saw forming for nearly 3 years. Okay, so this is kind of one of the major factors that are contributing to a possible market surge into the end of this year. And also, we can't disregard the Santa Claus rally, right? So if you guys forgot what a Santa Claus rally was, well, usually we tend to have a huge surge from, well, leading into Christmas time and all the way up into the very first official trading days of January. Now, if you guys remember, we basically skipped out on that, okay? So if you go back to, let's see, right here, right? So I remember everyone was worried about January, right? Because the first couple of trading days we're supposed to be seeing a surge, right? So we didn't see that. In fact, what we got was a very big and quick move down. All right, so this candlestick on a weekly time frame was 1.55%. I believe we almost reached 2% in just this week alone. However, obviously, due to the fact that we're in a bull market after October's lows in 2023, we continued to move up higher, just straight up making higher highs and higher lows. So this was just a brief pause, but we didn't get that Santa Claus rally for the very first few trading days of January. Now, I wouldn't be surprised if we do see, well, for this year, a Santa Claus rally into the very first few trading days of January and possibly giving us a blow off the top move where we have a very massive quick move to the upside, an immediate larger move to the downside. And I'll be going a lot more into detail as to what I mean somewhere around December in the official CFO Swing Watch report. And again, if you guys want to know how to become a reader, just message me, right? All you have to do is message me on Instagram, all right? It's a very, very simple process. I'm trying to make it as simple as possible to know where you guys can become a reader and also simultaneously a private member of the CFO Discord. All you have to do is simply DM me on Instagram. Okay? All right. So again, from a weekly perspective, everything looks very, very good. This year, we've had some 3 to 4 corrections so far, and that is very, very healthy. How do we know this? Well, the evidence is right in front of you guys. Right? Every single time we've had a correction or a corrective move to the downside, whether it be 5% or 10% move to the downside, we had an immediate pivot from major support levels or demand areas, and we continue to move up higher. And that is something that we want to be seeing in a healthy bull market. Healthy corrections begets a larger move to the upside. All right. So this overall bull market is very, very, very strong. You do not want to miss out. And I've been saying this since late 2022, mid to late 2022. If you guys have been following me since then, you guys should know that I've been telling everyone to get involved please get involved actively in the overall stock market from 2023 to 2026 because the opportunities will be endless. And it also called the October bottom in 2023 as well. And on top of that, sounds like I'm trying to list my accolades here, but literally I'm just giving you guys exactly play by play of what happened. So in, I think around mid-August, okay, I believe it's mid-August officially, I also told everyone during a live stream that I officially think and predict that the Feds will cut rates for the first time in Q3 of this year. So either right before Q3 or during Q3, or basically before the presidential elections. And guess what we got this year? We got a 50 basis point rate cut for the first time, I believe since 2021 or 2020, in September. Okay, and we're about to get another one on Thursday. There's a little wink there, all right? So again, all of these things have been correct of what I've said for the past 2+ years, and hopefully I can continue to be correct based on everything that I'm looking at, everything that I'm researching, and everything that I'm reading. And I do this for hours on end every single day, and most importantly, every single weekend as I'm preparing to write my official weekly CFO Springer Watch report. Okay? Alright? So this is the report, guys. Just again, one last show here. I'm just showing off my amazing report. I can say it's amazing because again, I'm the one that's doing the research. I'm the one that's writing every single word here. And I know there's a lot of people out there who are writing their newsletters. I'm not throwing out shade, but I know that there's a lot of people who are writing the newsletters using AI. I do not use AI and I never will because this is my own voice. All right, I want to make sure that I'm the one that's doing the research, I'm doing the due diligence, and also sharing that research and due diligence to everyone, right? And that is what I believe in. I really don't want to use AI. Sure, it sounds easy and stuff, but you know, I don't want it to be easy. I like the process of my top to bottom research. All right, my analysis, fundamentally or technically. So, you know, again, no shade to anyone out there who makes or researches for newsletters by using AI. No shade at all. I'm just saying that this works for me. All right, top to bottom research that's done by me. All right, I want to be in control of my research and what I'm reading and what I'm seeing. Right, so. Basically, guys, all right, I truly believe that we can see some very constructive higher highs and higher lows until we can hit another new all-time high on the overall benchmark markets on the S&P 500 and overall IWM, right? I would really like to see IWM going back to 2021 highs, right? So around here. Okay, so at least reach 240. Okay, I haven't really changed my targets on IWM at all this entire year. All of my targets have been met so far. The near-term targets of 204, 210, 216 or around 216.50 and also 226.50. So again, I would really like to see 233 being hit sometime this week. Maybe post OPEX. Okay. Not OPEX, post FOMC and actually post OPEX as well for this month. I believe that's November 17th, if I'm not mistaken. Let me make sure I said that correctly. Oh, November 14th. I think I said Sunday there, but Friday, November 15th, Friday. Okay, that's the official OPEX day, the monthly OPEX for November. Okay, so I would really like to see IWM at least minimum hitting my next major target at 233, either by post FOMC or by post OPEX, which is going to be on November 15th. All right. Well, that is it for tonight, guys. I'm just going to leave my report here. But again, thank you guys so much for all the support, all the likes so far. Just simply even just viewing my streams and watching my videos because again, it really helps. And I really like the fact that you guys are literally telling me with the views, the likes, the comments that you guys are enjoying my content, and most importantly, finding it applicable. Right? That is the most important part of my videos and my live streams. I want to make sure that my analysis, whether it be fundamental or technical, be applicable to your actual trading, right? To your actual trading journeys. So again, thank you guys so much for the support for the last couple of years. We're reaching the halfway point of 500 subscribers, and we're continuously exponentially growing in this community, and I'm very, very excited to be a part of that process. All right. Okay, so that is it for tonight, guys. For anyone who's just joining in now, you guys missed out on a lot. Again, this live stream was just to reiterate and confirm what I've been telling you guys of why the markets will surge into end of this year. And if you want more details, if you want all of the analysis that I've done this week alone, make sure you guys become a reader of the CFO Swing and Watch report as shown here. This is the weekly, well, this week's CFO Swing and Watch report. And also, if you guys want to watch the private technical analysis video, which is now public, that comes attached to the report itself, make sure you guys look down below in the description box to watch it. I highly, highly recommend you guys always watch these videos once it becomes public. But again, you guys can also always choose to watch it a day sooner and read this report as well on Sunday night by becoming a reader of this report. And simultaneously, you guys can also get access to the private CFO Discord. All right. Alright, so that is it for tonight, guys. I will see you guys on Thursday at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. So the same time as always. And again, make sure you guys watch the replay of this live stream. It's critical that you guys do, as you guys should be prepared and positioned just like and all of my readers and members, as we're prepared to see this market surge into the end of this year. All right, have a great rest of your night and good luck tomorrow.